Thank you, everybody. Before we start, I'd just like to acknowledge the traditional owners of country throughout Australia and recognise their continuing connection to land, water and culture. We pay our respects to their elders past, present and emerging. Thanks everyone for coming in today. This is a subject matter that has piqued enormous interest. The timing is good. The reality here is so much has happened in the last 4 to 6 weeks. It feels like a year's worth of activity when we think about how the space generally, fintech as a whole, blockchain, DLT, cryptocurrency has evolved. Things are happening now with incredible speed and momentum. Today's event's a straightforward one from my perspective, a little bit compacted. What I've tried to do here is get a lot of voices who are having conversations across the ecosystem together in one room. And it's a reflection of the conversations that I'm seeing, many of which are happening behind closed doors. People are starting to understand other people's context in a way that they previously didn't. And I think part of the challenge that we've had is less public chatter is happening than what's happening privately. And those private conversations are ostensibly related to the fact that people are trying to figure out, how this fits within their own business and whether or not it's a good time to be visible and participate. So the mainstream moment from my perspective has already happened. It's happened behind those closed doors, and I anticipate it'll continue to be fed and bleed into the public domain. And if history for me is any guide, 8 to 12 months ago, the chatter that we were seeing has now made it into the public domain. The level of conversation that I'm seeing now, the interest in this subject matter is extraordinary. It is 5x and 10x what it was a year ago. So that will make its way into the public domain. So this is the cheat sheet. This lets you know it's coming, and the opportunity here is for individuals, for businesses, to get across this subject matter now. We are super early in all of these conversations. 9 people will be speaking today, and they've all enthusiastically agreed to participate. Those who haven't been able to show up, no fault of their own, only a couple of other businesses, primarily unable to show up because I do things without a lot of notice. So it's hard to coordinate calendars. So Westpac were invited, they were keen to participate, we just couldn't align it. And you may, in fact, you have heard that CBA has been a little bit busy. So I'd spoken to the Commonwealth Bank and they had a little bit of news to announce yesterday. So couldn't quite, again, align, but everyone has shown up. So that's, I think, an important thing to recognise. The narrative has changed amongst Australia's business. They want to talk about this subject matter. They're much more willing to talk about it publicly. The framing here of some of the conversation we're going to have that I want everyone to sort of get across is everyone we speak to is a domain expert. We're speaking to people in verticals. And the challenge for most businesses is the nature of the conversations around fintech technology in particular is it's a horizontal conversation. We are intersecting verticals and people lose that thread as we go along, which is why I've decided that over a 90-minute period, we'll talk quickly and we'll surface a lot of the issues and ultimately try to connect the dots for you as you observe what's happening in this ecosystem. And hopefully it means you can go back into your own organisations and say, you know what, this is where we fit. But this is what I found out today is something we should be giving consideration to. So it's sort of extending the frame of view. So we don't look at things from a 90-degree perspective. It's 180, 270 and 360. 3 by 3 minute panels. We're just going to go hard back to back to back on these panel conversations. And effectively it's a story arc. The first 3 speakers that we have here today will set the scene. They'll talk about what's happening in the NPP, they'll talk about what happens in business, in payments, and they'll give you a sense of the issues that are impacting their business. We'll move into a session that talks about CBDCs, ESG, Bitcoin mining, and we'll talk about what that looks like and what businesses are doing. And then we'll close out in a forward-looking sort of way. We'll talk about what decentralized finance looks like. Lots of spoilers there. The reality here is we'll talk a lot about subject matter which will be familiar to some and entirely unfamiliar to others, and that's deliberate. We want people's heads to be a little bit blown apart in some respects here. We want you to think, wow, there's a lot I need to get across, or I need to connect into people. The key message here, the thematic that I'll take and start and end with is the mainstream moment has occurred. Now, whether you view that as CBA's announcement yesterday or the Senate Committee's reflections and recommendations 2 or 3 weeks ago, or the fact that we had a national blockchain roadmap delivered in 2020, whatever that moment is, it's happened. And so now what I'm doing is encouraging everyone to get across this subject matter as quickly as possible. First three speakers, I'm going to let them introduce themselves by name and role. LinkedIn profiles are there for everybody to creep on each other as you see fit, so we won't spend a lot of time talking about what people have done historically. But I'll kick off Katrina Stuart. Katrina, I'll get you just to introduce yourself, and then we'll just jump straight into the subject matter.
Thanks, Steve. So my name's Katrina Stuart, and I'm responsible for engagement at New Payments Platform Australia.
Terrific. Katrina, I'm going to jump in. We'll do the introductions to the others in a second as we get to them. Katrina, the NPP, give us the 101. What is the NPP? It's an acronym that is pervasive. It's in lots of rooms. I think a lot of people they hear the acronym and they don't know what it is. Tell people what the NPP is.
So the NPP is basically modern payments infrastructure that enables real-time payments and movement of funds between people's bank accounts. And it's not just about the speed with money moving in basically about 10 seconds, but it's also infrastructure that's always available, whether it's a Sunday or a public holiday. It has quite a lot of capability around the data as well to help enable some additional data passed together with a payment. And we've also got the Pay ID addressing service as well, which is intended to be a safer way for people to make payments, because you get confirmation of who you're paying before you make the payment. And really the NPP was designed to be a more modern payment system, really designed to support Australia as we move more into a digital economy.
Katrina, who owns the NPP and how did it come together? Because the history of these things, I think, is important to where we are. People would like things to happen quickly. How far back did it start? Who are sort of the component parts that have put the NPP together?
So it dates back a number of years when the RBA did a review into the payment system and basically concluded that the existing payment infrastructure was a bit outdated and there needed to be some change and modernisation to how we make payments here in Australia. And as a result of that, a number of industry organisations came together to design how that might actually work. And so that dates back from, I think the whole thing started in about sort of 2008 in terms of the initial discussions. The NPP was born, created as an organisation in 2016, went live in 2018, so it's been running for a couple of years now. And it's collectively owned by a number of financial organisations, so the 4 major banks, a number of the other domestic banks, some of the international banks. The Reserve Bank is also a shareholder and was quite instrumental in the formation of it. And some of the sort of aggregators as well, or people who actually specialise in providing access to payment systems. So it's collectively owned by 14 organisations.
Right. Hayley, I'll get you to introduce yourself.
Yeah, hi, I'm Hayley Hopwood and I'm the Head of Growth for Australia and New Zealand at Stripe.
Hayley, sometimes the characterisation here is not a good one, but the best kept secret as far as corporate Australia is concerned, I think in the March valuation, Stripe is a $120 billion business. Why aren't you more obviously in front of people all the time to make the point that you are an absolute monster in the financial services sector?
Yeah, I think we're a humble organisation and our primary goal is to grow the GDP of the internet. And we look at that from a technology lens and helping businesses build the infrastructure that they need to be able to on-sell, embedded finance and to grow and move their money, domestically and globally with ease. So
tech first, Hayley. I mean, this is one of the things I think the people that set up the company were pretty smart. They were tech focused early. How are you seeing that sort of shift? People are now talking about, big businesses, the Googles of this world, the Facebooks of this world, where they're leading with tech. How have you seen that with an organisation that was already sort of tech focused?
Yeah, I mean, we're seeing a real shift in the way businesses are thinking about embedded finance and how they can on-sell that. So, the next power or the wave that we're sort of seeing is within platforms and super apps, which are, aligned with the industries that platforms are servicing, but also embedding software and financial tools that might not be readily available, or you have to pick and match and marry them up. So it gives you a fragmented approach to how you're servicing finance. So we're trying to align and be the conduit to build all of that into businesses to make it easier to sort of on-sell.
Nick, can you introduce yourself for me, please?
Steve, g'day. I'm the General Manager of Payments within the Securities and Payments division of the ASX.
So interesting, when Katrina talks about basically the infrastructure, the payment stuff, we talked to Hayley about the fact that they facilitate the payments. This is what they're doing. They're building the GDP out of the internet. Nick, the issues that then you see, when you look across the industry, one of the ones that you and I were chatting about the other day was a payments review that was facilitated by Scott Farrell for Treasury. It's the kind of thing which I'm surprised about. It didn't really get the attention it should have. Can you just tell us a little bit, one, why you think it was important, and whether you share the view that it was a little bit unders as far as how much people paid attention to it, given its potential significance?
Steve, the Scott Farrell's payments review report, I think, if the recommendations are implemented by the government, will signal, I think, the biggest change in the payments regulatory landscape for a very long time. It's a really important document, but it's a bit like what you said at the start. People may not be talking about it so much in public as they are in private. For me, there are many great insights in the report, but the one really good, important one from my point of view is the line that is drawn between payments and data. Of course, we conventionally think about payments as the movement of cash or value, and of course that is unquestionably part of payments. But as Scott Farrell has pointed out, with the digitisation of payments, a lot of payments consist in the transfer of data, and so to a very large extent, the payments ecosystem is sort of becoming a subset of the larger data ecosystem. And so, in a broader sense, Scott calls out, the interrelationship between the evolution of the digital economy and payments. And I think, what's really important from the report is the need for a coherent strategy around the payments regulatory framework. And, that's going to require, I think, a lot of collaboration between the private sector regulators and standard setters. For me, just one further point about the report, I think, continuing that theme, I think the recommendation around, greater Treasury leadership in a strategic sense, looking at the payments regulatory landscape through the lens of national interest is a really important one.
And I don't think many people haven't sort of looked at it. If you go to the final chapter of that recommendation, it speaks to issues outside of scope. I've described them not as the canary in the coal mine, but the elephant that's sort of jammed in the coal mine here. It talks about CBDCs, it talks about cryptocurrency, it talks about digital assets and digital wallets. It is forward-looking, but not so far forward-looking that we shouldn't be looking at it. And that's one of the challenges, I think, in the conversations that we're having here at the moment. Katrina, on the point of where the NPP is today, separate out from where it's sort of going, what are the primary sort of deliverable there? What you mentioned a couple of things they're doing. So what's the today state, the current state of the NPP? What's it doing in sort of these COVID times? And then where are we shifting to? What are the sorts of applications that we think the NPP will facilitate in the short to medium term?
Mm-hmm. Thanks, Steve. So today the platform's doing about 2.8 million transactions a day. So as a retail banking customer, if you're making a payment from your bank, that's probably going via the NPP by default. But increasingly, we're seeing a number of businesses use the platform both as a way of receiving payments from customers, but also to use it for payments out as well. So we've seen some great use cases of things like organisations starting to do immediate payments out to taxi drivers over the weekend at the end of a shift, for insurance companies paying out travel claims immediately to their customers who need those funds. And particularly in recent times, we've seen increasing government use of the platform as well. So the NPP's played quite a critical role by helping to assist getting disaster payments out to people that need them during the recent pandemic. And so we've seen about 17 million payments being processed immediately by the MPP. And that's fantastic, because that means that within about 30 minutes of somebody calling up Services Australia, they've actually got the money in their account and off they go. So it's been, really encouraging to see some of that development over the last couple of years. But today, the MPP basically supports what we might kind of call a push payment. So I have to go to my banking channel and I basically make that payment. What we're currently developing together with the industry is some capability that will facilitate more sort of debit-like payments with the customs authorisation. So we're developing a service called Pay2, which will support third-party payment initiation. So parties that have been authorised by a customer to basically request payments from their account will be able to do so. And that's really going to, I think, transform the payments landscape in terms of what that can be used for. So it can be used for things like recurring payments. If I want to pay my utility bill, it could be used for e-commerce payments. I've shop frequently at Amazon and I want to be able to use my bank account to fund those transactions. It can be used as a funding source for when I want to, fund my digital wallet. But it can be used by businesses that want to, automate payroll runs, for e-invoicing, and even things like smart contracts and how that comes together as well when you've got the real-time movement of funds that's triggered at the time, say, that you've got a change in asset ownership. So I think it really will open up a whole new world of opportunities in terms of how the platform can be used, and that's really exciting.
Hayley, does Stripe care how people want to sort of do these things? I mean, the reality, and we come to the issue of crypto. I know that Stripe got into crypto early and sort of paused that. That was a 2014 sort of exercise. Do you care as a provider here, given the service you are sort of facilitating here? Does it matter?
Yes, we deeply care. We're very focused and heavily centred around pay-ins and payouts for both businesses. So if we can support a multitude of channels and how we can go about doing that, then it's something that we're very interested in locally as well. So, we do all of these sort of projects in region. So we want to have the same experience if someone is wanting to expand globally, that they're going to have a similar experience to open banking of what they do here in Australia is what they do over in the UK. So yeah, we do care deeply, and we're seeing this systemic shift around how people do want to pay. And we've got a front row seat to that. We're very fortunate. I mean, I think the Reserve Bank released that buy now, pay later's increased by 55%, and that's largely being driven by debit cards as well. So I think we will see that transformation in bank to bank transfers, and it'll become really important to individuals as well as businesses to be able to support these kind of transactions.
And how does that impact, do you think, the direction that Stripe will go in from a crypto perspective? Because it said 2014 looked at it, 2018 kind of paused it. Given what you're seeing at the moment in the COVID-19 environment, what does that future landscape look like?
Yeah, oh, well, I think today's a testament of that, of how many attendees that we have. And you're right, like Stripe did have early ambitions on crypto. We've always been really bullish. We launched with Bitcoin in 2014. We've sunsetted that in 2018, just purely because it was deemed more of an asset rather than the means of an exchange. However, we're rapidly building out our crypto team at the moment because we're starting to see that shift, and we're starting to see what that's going to look like in the future, and we're wanting to be prepared for that.
It's always surprised me. I mean, a lot of the challenges I've had in the subject matter as I've broached it over the years is too many people formed a view in 2017 and 18 and stuck to that view. I mean, interesting to hear you talk about 2014 to 2018 to 2021. I think some of the lag in the Australian economy when it comes to people talking about this subject matter is they're just committed to a position and haven't moved from it. Nick, here's another exciting acronym for us, CDR. Do you want to tell us what the CDR is? Again, you've got a view that it's important and that has some potential to really make an impact. Why is CDR, the consumer data right, an important part of this mix as well?
Well, it's going to be, CDR, the government said that the ultimate objective is an economy-wide consumer data right. So, it will, eventually over time, touch everything really. Open banking's underway, telco, energy slated for the near term. and the Treasury consulted this year on other sectors or data sets that should be prioritised for subsequent rollout. Everything from superannuation to insurance, non-bank lending, loyalty points, digital platforms, and government itself. So, very far-reaching, and it's expanding in not only sectorally, but also by function. So, we could see it move shortly from read-only access by consumers to data held about them to read plus action initiation, or colloquially, read plus write. So action initiation, opening accounts with service providers, closing accounts, and initiating payments. So what you're seeing is really a transformation of the competitive landscape. And then more recently, we've had the participation models for the CDR expand. So the accredited data recipients, the barriers for them to participate are coming down with the introduction of sponsorship models, where they may acquire an infrastructure service from a third party to help them into the ecosystem. So, Steve, I think it's really important, and it's far-reaching, and as I said earlier, it intersects strongly with payments,
Katrina, I guess on the CDR side, Katrina, the data flow isn't what we thought it was going to be, right? Weren't we anticipating when these conversations started, lots more things would be attached to this? And the velocity is appreciated, and the amount of information, or the information that necessarily has to flow, has changed significantly. Is that what this future looks like on the NPP side? We're just facilitating other types of data, or sort of it's just not what we expected it to be?
I think when you look at the CDR and what's happened to date, I think with data sharing, it's fairly limited as to what you can do with that, and kind of the different customer value propositions that you can build around that. I think it's when actually you get to a point where you can take action as a result of some of that data, that's where it starts to get really powerful. And I think, as Nick said, when CDR extends to action initiation and payment initiation, we'll see a lot more activity, and I think a lot more innovation around what that might look like from a consumer's perspective. I think from more broadly from a data perspective, as particularly as we look at it in relation to payments, I think it's a question about what is the value of the data, and I don't think it's so much looking at the data moving together with a payment, but it's about how do we as a platform help facilitate the exchange of that data between the different endpoints. And I think particularly around for things like if I need to do more detailed reconciliation, or say, for example, I want to access my dividend statement, I can actually do that maybe through a URL link contained within that payment message. So I think it's bringing together some of that capability to create more compelling value propositions and process efficiencies as well across the economy. And it's going to be about what different roles organisations play in that kind of data economy to help facilitate it.
And I think the mother of all acronyms for me at the moment is KYC stuff. And it's KYC, it's AML, it's CTF. Everything comes back to that. That's been my experience. The nature of cryptocurrency space is it's one of the things that people hang over the space as a whole. It says it's lots of people, we can't identify them, they're all nefarious actors, they're facilitating so many things on the internet that are terrible, we can't possibly do it unless we get KYC right. So Hayley, your business is KYC focused, right? KYC out of the box here. Can't we just fix this problem? This is, again, we can blunt a lot of the conversations around digital assets or otherwise very quickly if KYC is sorted. And follow-on question, how is it not already sorted in relation to this thing? Why does this still cause so much trepidation? Why aren't these systems talking to each other?
Yeah, I think globally it's just fragmented, right? It's really difficult. And I think that's where we play a role, is that, that conduit of pulling all of the pieces globally together to make it a little bit more streamlined, and to know what information is important and regulated in what country. So to really just, button it up to make it easy for businesses to transact globally, or whether it be locally. And I think the one key benefit that's built in the infrastructure at Stripe is being able to onboard, if you are a platform or a super app, being able to onboard your vendors and your users in a KYC compliant manner. Like, you can own that experience, but it's all underpinned by our technology and knowing that you're going to be safe and trusted. I think it's it's really difficult for businesses to do that independently or to use third parties. And again, it goes back to that fragmented point, but to have it all embedded in your financial infrastructure, there's merit and ease of use to that. And I think that that's key. And we're going to see this, over the coming years as well, where, data is tech gold, right? Businesses are wanting to understand more about their consumers. They're wanting to understand more about the businesses that they transact with, and how do we streamline and make that really easy from a reconciliation perspective, but also to personalize, businesses and offerings to consumers as well. So it's a double-sided sort of network when it comes to sort of KYC and also orchestrating the funds flows.
I think that bell says I've only got a minute. Nick, here's the question for you. Can we get the KYC that we deserve? Can we get the KYC we need? Do you see enough movement in relation to that to suggest that we might get this right enough for things to really accelerate?
Good question, Steve. The short answer is I've seen more positive change in the last 12 to 18 months than I have in the many years prior. So in addition to what Hayley mentioned, Scott Farrell Payments Review called out the need for better coordination, and no one would disagree with that in terms of the AUSTRAC as part of the broader payments regulation. You've had changes to AML-CTF to increase the capacity for reliance on third-party KYC. You've had a recommendation that you should have consumer-directed sharing of KYC under the CDR. And you've got the Commonwealth Government's Trusted Digital Identity Bill, which should create opportunities for the private sector to leverage the Commonwealth Government's digital identity system. So positive. I'm not saying it is where it should be, but that's some positive direction.
Here's the moral of the story, I think, for all of us here. I've got a new acronym. It's KYA. It's Know Your Acronyms. I mean, these are the things that impact everybody's rooms here. And in the first session, this was my point. The reality is there are lots of reviews taking place. Treasury is looking at a lot of these things closely. APRA is involved in these things. ASIC is involved in these things. All the regulators are looking at these things. We've seen an absolute torrent of consultations. People can't complain they haven't been consulted with. The problem is we've been consulted with too much and everyone's so overwhelmed in relation to it. That's 30 minutes. Thank you, panel one, for doing that. I appreciate that time. I'm going to jump straight into panel number two, but thanks for setting the scene for us all.
Thanks, Steve. Thanks.
Panel two, straight in. I have Lisa Wade here. I have Anne Bowering in here, and I have Andrew G. I'm going to start off with you, Lisa. And I've already set the bar when we met. I think the first time a few months back at Blockchain Worker, I said you're my favourite banker. Sorry, Andrew, my favourite banker, Lisa. So you set the scene for me.
I think I said I'm not really a banker.
Yes, I think that's why I could just sense that in the room. So Lisa, can you just introduce yourself, as in by name and the role that you play, and then I'll jump straight into questions with you.
So Lisa Wade, Head of Digital Innovation and Sustainability at National Australia Bank.
Lisa, I'm going to come back to CBDC stuff because I know it's a bread and butter in what you're doing in the day-to-day, but I'll start somewhere else here for us. I'll start with ESG as another acronym. I'm continuing in this thematic when people hear all these things. What is ESG? Has it ever been more important? And why is it something that people can no longer ignore as a subject matter?
Yeah, great. One of my favourite topics. Thank you. So ESG is an acronym for your acronym soup that we're developing here today, and it stands for environmental, social and governance, but it also has many, many names, and we sort of call it a continuum at National Australia Bank. So you have responsible investment, you have impact investing, and everything in between, and various different ways of applying it. And I personally believe that there's never been a more important time for it. And I also don't think I'm alone there. I would go as far as to say as basic ESG has become mainstream in finance, and finance is catching up to the amount of money that is flowing into the commitments to ESG. And what we have is probably a constraint problem of a lack of authentic product in the market, because we're all shooting fish in the same barrel, and what we need to do is actually start improving behaviour so there's more investable opportunities. And I think that is a hugely important piece of work, and quite excited by all of the good news flow that's coming out of COP, really, except for maybe our government.
We'll move on quickly. Funny thing, Lisa, that ESG conversation is pervasive. When I think about blockchain, DLT, crypto, these are communities that care about what they're doing, and sort of they're investing their time, they're investing with purpose a lot of their personal resources as well. And I'll get you to quickly introduce yourself as well. And then the question that will follow is, what are you seeing with respect to that? How is investment changing? You know, you've had a material uplift in the number of people, I think, on your books. Let me know what that looks like as a number. But how are you seeing investment changing across the globe, given the reach that Computershare has?
Yeah, hi everyone. So I'm Anne Bowering, CEO of the Issuer Services business for Computershare here in Australia and New Zealand. Yeah, ESG, wow, what a fantastic conversation, and how great to see how far that conversation's come in the last 10 years. So 10 years ago, I was involved in attempting to set up a clean tech stock exchange back in the day, and it was really fascinating to see, you know, why that didn't work at that time. But to be here today and see real investor demand, what has changed in this environment is the real investor demand and the impact that is happening on companies. So the decisions that are being made, the strategies that are being devised, and the accountability being faced by directors. You know, I spoke on a panel a few weeks ago, and I was interviewing two of our clients, one from the US, Budweiser, and one of our largest listed companies here in Australia, and both of them talked about ESG as being, absolute front and centre mainstream considerations for their board at the moment. So it's really it's a fantastic time.
And how many get it? Yeah, is it still, does the majority get it? Have we hit 50.1%? Because again, these are some of the mishmash and the sort of this, when I say it's a horizontal conversation, these things are impacting all the decisions in all the rooms are in. How many get it at this point in time?
Yeah, I think the majority get it, right? But it's not easy, right? It's a continuum. To Lisa's point, it's not something you wake up in a world where you've got your strategies in place and you're as a company and as a board and you're set to go. It's got to be a continuum and it's got to be continuous. So I think people get it, but they certainly need help getting there. And they need help on the journey. But you can see, as good markets do, advice, advisors, products, technology coming in and helping to solve for that problem.
It might seem like a tenuous connection, Andrew, but it's not. The reality here is when you and I chat about ESG stuff, we're talking about Bitcoin as well, right? Macquarie are looking at this subject matter now, but that's one of the fundamental focuses of the way you're framing potential investment or commitment of time in relation to this. How does this ESG conversation sort of play into the mindset that is Macquarie Bank looking at something like Bitcoin as a potential as a product?
Hi, thanks, Steve. I'll just introduce myself briefly. First, Andrew G, Macquarie Bank. I run a co-head of a division that is specialised in asset finance. So, look, ESG is really pervasive across all of our investment decisions. There is a process that we go through to look at the potential impacts of all the ESG elements of the things that we're putting money into, or the client situations that we find ourselves in. Bitcoin as a topic for us has been quite interesting over the last. I've probably characterised as about 18 months, and that really coincides with the more mainstreaming, I'd describe it as, of Bitcoin as a currency or an asset class, or however you want to describe it. And we've made some small investments along the way, and we've looked at those investments through the lens of both financial returns, but ultimately what is going to be sustainable. And we've seen that crackdowns in China with respect to the energy consumption with Bitcoin mining have had a real impact on the industry itself. And more there is a transition from more traditional energy generation into what is going to be sustainable for this industry as a whole.
That's an interesting one, Andrew, because again, this is some of the nuance that's lost for a lot of people. For those that haven't been paying attention, China banned Bitcoin and cryptocurrency again. It's not the first time. This time they kind of meant it, and a lot of the hash power that was powering the network literally left, got switched off. Some went across borders. I think a lot of the points that were lost are the nuance of some of it went to the US. In fact, a lot of it went to the US, but the US is dealing with the kinds of issues that are ESG related, and they recognise what green energy looks like. And it's a different investment environment in that context. From Macquarie's perspective, is the US a better place to do that? Australia, obviously, we have our challenges when it comes to these sorts of conversations, but from the Macquarie perspective, is the US a better place, or, why the US as far as what you're seeing?
You're right about the transition of hash or computer power that was devoted to mining in China. It was pretty much shut down overnight, going back a couple of months ago. We've seen that transition into other markets. There are sort of a wide range of markets that you could conduct Bitcoin mining in. I think largely they rely on, Bitcoin mining relies on the availability of the computing power and the ability to get your hands on that, but also then the actual energy generation. And we've looked at different markets. At this point, we have better expertise, I think, in identifying the right locations with the right levels of sustainable and renewable energy in the United States, in a much bigger market. And at this stage, we're settling on that as the place to look to develop further.
Lisa, I'm going to jump to you on this subject matter. I know you like it. The reality is, if you listen to some views, said we're opposite ends of the spectrum, there is no greater catastrophe in the world than Bitcoin mining. It should all be stopped. Shame on anyone that participates. Lisa, that's your view, right? That's the position that you're taking into this conversation?
Not at all, no. I mean, from my point of view, being environmental finance person first, obviously it concerns me the amount of power that is used, but if you take a step back and look at it in perspective, it's 0.5% of all power generation in the world is used in blockchain. And I think we need to really take a pragmatic approach, because what we're building is future infrastructure. And Bank of America released a report a few weeks ago and compared it to 15% of all energy is US households. So, really is a rounding error when it comes to the total percentage of all energy usage. What I do love, though, is in the Bragg report, the tax break for using renewable energy, because it's an absolute no-brainer for Bitcoin miners to use renewable energy and support green finance and effectively make blockchain green. And then we also have, the new chains emerging like Hedera and networks like that actually do have a lighter carbon footprint, for want of a better term. And I do encourage and am very passionate about projects like that as well. And then obviously with the new Ethereum network and the staking that will come through, that will reduce the footprint as well.
And when you're looking at these sort of trends as well, like, again, I'm mashing together a lot of things. It's the point of this conversation today. We look at things like what happened with GameStop in the US and with Robinhood. You're watching a lack of loyalty in a lot of respects. People are taking their position, they're assuming the position really aggressively, they're shorting these things. Are you seeing a lot of difference in the way people are choosing to invest? Are they traveling much more in packs and herds in an unfamiliar way to what you're observing over recent years?
Well, look, I think that might be an oversimplification of what is probably a number of factors coming together, particularly in the US market. So we've certainly seen similar trends happening in Australia. We saw, as you referenced before, 2 million, increase of 2 million investors on our books in the space of 12 months, which is unprecedented and unheard of, particularly when it grew organically. And so these are new investors coming to the market with new investment thesis. And in Australia, they were able to enter the market really easily because we've got a great structure for retail investors. It's not as heavily intermediated as the US market is. So one of the challenges in the US, so we have, the same types of investors coming to the market in Australia, but in the US, they realise their ability to participate. So this is wanting to participate and be directly involved in a company was more of a challenge in the US, and hence, if you like, the revolt that's happening there, where they're pushing for direct access to be on the register of the company to influence things like we have here, like ESG outcomes and behaviour and so forth. But they have certainly been enabled by technology and by platforms such as Reddit and Twitter, which have enabled these people to come together, share an idea, and and act together to change an outcome, which is that's what markets are about. But you can see how technology really has changed that. But it's important to note the market structure is very different in Australia. We see them coming to market for the same reason. They want to engage and participate. But in the US, it's certainly a different structure. So it's been fascinating to see that unfold.
And is it a lot of the ethos of those who are in sort of the cryptocurrency space is, not your keys, not your crypto? Is it akin to that in a lot of respects? You've seen people that want a direct participation in this, regardless of what asset class they look at. They just want to be more closely connected. Is that something you're seeing as a structural change that's taken place in the last 18 or so months?
Yeah, certainly. Certainly that's part of it. There are things like meetings, shareholder meetings, the ability to attend a shareholder meeting and vote your share. So it's that connection about how do I influence outcomes? How do I participate in that? I think that's definitely part of it. I think, there's a bit of an establishment point to be made as well. It's like, well, what are these intermediaries doing with my asset? I want control of my asset. So yes, to your keys point, I think there's definitely an analogy there.
Andrew, two ends of the conversation here. One, how have you found this partnership conversation? I think when you and I were chatting about the nature of the community, I won't put words in your mouth about how you found it, but you've gone in there, you're wearing the Macquarie Bank hat. How open are people having these conversations? And is it materially different from a lot of the conversations you have in a traditional finance setting?
I think people are generally very open to talk. The sharing of knowledge in this community is very important. I think the levels of knowledge that people have, other than very, very few, are quite limited. I can't profess to know a vast amount about blockchain or a broad range of cryptocurrencies, or can I answer the question of why or how? Not really. These are difficult questions to answer, and that depth of knowledge and sharing of information is quite important. We found all of the participants that we've spoken to in the cryptocurrency space, from investors to operators to people who are just showing interest, or those that are selling the tools, the picks and shovels effectively that mine, very open to discussions, and it's been a great opportunity for us to learn, and that's what we've aimed to do. As I said at the start, we don't profess at all to have great expertise, but we think that there is a lot to be learned here in what is still quite a nascent industry.
I think you and I had a laugh, Andrew, because I think we were talking about your kids, your youngest kid versus your oldest kid. You told me that you're giving less consideration to the oldest kid's view because they're getting a bit old now when they're giving you advice. We said, well, 26-year-old, you go a bit over it. They're not really seeing the trends. The 15-year-olds across it. What's that experience for you? Given, again, you live in a suited world with lots of conversations where people believe themselves to understand and know what financial markets look like. How is that compared in contrast with your 15-year-old that says, here's what I'm seeing on the internet?
I think it's varied. I mean, the level of conversation around cryptocurrency generally is pretty highly correlated to its rising value. I'd say over the last 12 or 18 months, people have opinions, right? There's a wide range of opinions on value or non-value. And I have 5 children, and across those 5 children, there's a range of opinions. The guy at the top is pretty much a non-believer, and my daughter at the end is struggling to she asked the understand question. Now she's 15, so she's old enough to understand, but she doesn't quite get it. And the three in between each have varying levels and opinions, and some have investments in cryptocurrencies. So it's really varied, and I think that is pretty representative of the population in general.
The 15-year-old sounds smart, Andrew. I'll bet on that one. So if there's some market that I can put some money on, I go bet the 15-year-old gets it right.
She asked the right questions. I just don't always have the answers.
That's good. It's a good sign. Lisa, we'll jump into the serious topic here, related to the way we look at what's happening in the world, and probably the most prolific topic for governments around the world at the moment, which is central bank digital currencies. It is in every room, when people realise it or not. This is something that has caused enormous consternation, enormous concern. I think we can probably thank, in a lot of respects, Mark Zuckerberg for saying, "I'm going to make my own Zuckbucks." People panicked, and very quickly he was put in front of politicians to say, "Don't make your own money." Can you give me the Lisa Wade 4-quadrant theory of the way this is sort of playing out at the moment?
Yeah, sure. So the way we're looking at it is, we've broken it into 4 quadrants because there are so many different conversations, so many different technology companies sort of trying to claim the space. And so we've broken it into wholesale and retail, central bank digital currencies, and stable coins. So in the wholesale world, we're in partnership with CommBank, Reserve Bank of Australia, and Perpetual, developing a proof of concept, which I think a paper will come out any day now, which has been for a little while, but we've built a platform that has delivered on what we promised, which was a central bank digital currency issued, a syndicated loan issued using central bank digital currency. There'll be a few really cool technology surprises in there, but obviously I'm under NDA and the paper will be released. Then we're seeing a number of companies like Finality come through that are looking at wholesale stable coins. So a wholesale stablecoin different to a wholesale central bank digital currency in that the underlying is backed by a basket of assets in this case. And the reason why we split between wholesale and retail is because for wholesale, we are looking at trades that are high value, low volume. So we don't really need to worry about how fast the blockchain is working because we're looking at trades that take months and months and months to settle anyway. And to put together, so they're much more complicated trades, and they have a lot more problems a lot more problems for us to solve. Then we have a piece of work that I see Nigel Dobson is here, and Nigel, feel free to jump in. Where we're looking to create a market collaboration working with Circle and Centre in a retail stablecoin. And what is the difference between a retail stablecoin and a wholesale stablecoin? Well, it's just this really geeky thing that I'm not even qualified to talk about, which is how the hash time locks are done when the asset and the cash is changing hands. And they're just using different hash protocols to affect that, what we call atomic settlement. But within that is quite a really important thing is that in the technology that we're using for the wholesale CBDC, it is not fast enough for retail. It may never be fast enough because the algorithm is much more complex. And so far the systems can't run them as fast as an NPP. And I believe that for the retail central bank digital currency, we'll be in a very similar position that hash time lock that is used in the Centre and Circle is not, to my view, and this is just my opinion, this is probably not the market view, is the risk inside of the program, the programmability that makes the transaction happen is quite high. So it's okay for small amounts of money, but it's not okay for general use right now. But we're working very hard to develop it. And I think that there's obviously in the Bragg report, there's more interest in retail CBDC. So we're certainly keen to look at projects. It's just a matter of sort of filtering through all the noise and the technology to move a little bit further.
I'll come back to you on questions about sort of the structural importance of this. And I'll jump to you though, from what you see on the investor side and the company side, the appetite for these kinds of for products to be spawned out of DLT and crypto businesses, the ETFs that we're seeing enormous pressure locally. There's a variation of ETFs. They're not spot ETFs that are sort of coming to market at the moment, and we're watching it in the US. What do you see there as one investor appetite or the conversations around businesses? Are they looking to rush to market? Are they trying to get in front of this opportunity more or less than is the norm?
Yeah, look, ETFs are our fastest growing business right now. They're, we just can't, can't get there soon enough. The appetite in the marketplace from investors is huge. And it's interesting when you start looking at the demographic that sits behind that, who are investing in ETFs and understanding that profile, which is obviously really powerful for our clients, for the issuers to understand what the investor behaviour is. But it's certainly, the media's covered it too, like millennials investing, speaking of children, so probably Andrew's oldest child, a little bit older again, investing in ETFs, right? That's their sweet spot. And, I think there's a lot of trust, I think, that's built up through investing in ETFs. It's a listed platform, familiar entry points in the marketplace, familiar reporting and tracking and the like. So it's given people a lot of confidence, I think, in investing and giving them obviously the exposure that they're looking for, diversity and exposure. ETFs, yeah, absolutely at the frontier when it comes to crypto. So, we obviously recently, one of our clients was first to market with a crypto themed ETF, which was obviously based off investing in businesses that had exposure to crypto. So that was really exciting. And yes, we're now seeing the 100-meter dash in relation to being the first ETF listed with, which is a pure crypto-based ETF. So really exciting. I'm expecting, you can see in the media that there's multiple points of entry there. But conversely, I think there are probably some other houses who are going to take a bit more of a conservative approach in coming to market in this space, a bit more of a watch and see. So, there's no doubt, I'm sure there'll be huge investor appetite. We saw the US, the ETF that was launched in the US, which was a synthetic, which was based off the derivatives of the coin. And so that was massively huge uptake in the US on that. So clearly there's investor demand and the opportunity to invest or get exposure to crypto via the regulated market framework. I didn't hear the conversation earlier, but I'm sure Nick touched on that. And the regulated framework, I think, it provides that that infrastructure for retail investors to come in and get exposure to crypto. So it's a really fascinating space.
I think the one that you mentioned in the US, and I think it was the second highest inflows in history, fastest, I think, behind gold. This was not the version that people were waiting for as well. I mean, this is as a futures ETF wasn't quite the thing that they wanted, and they still just piled into that. Andrew, does that mean, you talked about the fact that it helps when Bitcoin's at $80,000+ here? Are things like collateralization and ETF type products, is that it? Is that the institutional moment? We talked about how much interest there was a year ago, and in my reckoning, 5, 10, 20x more. Is that the thing now, the institutional buy-in? You go, it's the final piece of the puzzle here before the floodgates open?
I think that's possibly right. I mean, the institutional approach is probably still one of caution, and look, like we are approaching that as an organisation cautiously as well. But we are, at an institutional level, exploring opportunities in futures. We offer client facilitation in futures, advisory. We've looked at lending transaction where the collateral is either directly cryptocurrency or some sort of fund that's supported by cryptocurrency. There's pure asset financing plays in the space of mining as well. And obviously a lot of energy. So I think there's a wide range of things that we're seeing already as opportunities, and as we learn more and the market develops more, there'll be a lot more opportunities to really, I think, mainstream from an institutional perspective, the opportunity that's in cryptocurrency and blockchain. And that's not really even considering the technology opportunity that there will be for organisations like us. We sort of, if you break it into two, we look at the cryptocurrency market, and then the technology market is also obviously got a lot of appeal and a lot of opportunity to improve the efficiency of ways that things have been done traditionally.
I'll come back with the dark cloud then, Lisa. I'll let you either, we should be concerned about the dark and looming cloud, or you can tell me there's some sunlight. Should governments be worried? I mean, structurally, is the concern here this tips the whole system over when we're talking about things like CBDCs and stable coins, given the potential sort of inflows? Does it keep you up at night?
I do I'm very passionate about the CBDC project because of that. I do think that we need to have an Australian government regulated and Australian government issued central bank digital currency so that we have the right infrastructure to be able to participate in what we're calling Web 3.0, which is the movement and shift of commerce into digital assets and into atomic settlement. The functionality is already there in the market. It's already operating in DeFi, and people are going to want to use it more and more the more and more goods and services move into Web 3.0, and I think we need to be ready. But I do think there's a place for stable coins as well. And then I think there'll be a lot of discernment in the issuers of stable coins and who people are backing. And the hidden thing behind all of this is the collateralization and what people are using for collateral with the stable coins. And there is a grave danger that if it isn't regulated, then we'll have stable coins issued that then become leverage upon leverage upon leverage. And when you start thinking about that, having lived through the GFC, the maths on that is literally mind-blowing of what could happen if we take our eye off the ball and big stable coins start managing leverage treasuries. Then it could get really ugly really quickly, and no one wants that to happen. So I think that having a really solid central bank digital currency global infrastructure is really important so that large transactions can happen and we can really get to institutional quality, because the functionality of programmability is so incredible for de-risking assets and investments. And there really is so much potential in how we can issue. I don't think there will be financial products, but how we can serve customers and our fellow humans, giving them access to capital, and just the uplift in society that we can bring by increasing financial literacy. All of those benefits are so huge. I just feel like it will be in a better place if we also have government infrastructure around that as well.
And Lisa, on the issue of wholesale versus retail, I think the RBA is on the record as saying in wholesale, lots of investigation, retail, no pressing case for it now. Is it possible to maintain that narrative in the face of lots of retail conversation? The reality of other jurisdictions is, they don't have our systems in place, so there's a more pressing need potentially for sort of retail adoption. Do we have to go with the Joneses here and lift our game with respect to a retail conversation?
Look, I mean, Tony Richards is on the call, so he might want to jump in, but I think they're doing a really good job, because if you really I don't even need to talk about politics or policies or anything like that to go down to the fundamentals. We all have to do the work, building the teams, understanding the systems, the amount of technology providers there are out there, we need to understand them. And I think that, we, as a human, I separate it into the 4 quadrants because I think it's important for understanding. But really, we're doing the same work. And I think the RBA is doing the work. They're doing a lot of hard work. To my knowledge, they've built a fantastic team. And, I feel as though when the report comes out, we're doing our job by being, leaders in certain aspects of the work we're doing. And I think that that's all that's required of all of us, is to take leadership. And, we need to go together. So I think it's one of my favourite quotes. If you want to go fast, go alone. If you want to go far, go together. And the Reserve Bank is certainly collaborating, with Project Dunbar and things like that. So I think that we'll get there in time, on time.
I think it's the important message. Again, the point of today, these are the conversations that are taking place. So I share your view, Lisa. People aren't doing this enough publicly. And part of it relates to no one wants to look foolish. This subject matter broadly, again, I've touched on a lot of things very quickly. There's just too much for people to stay across. And I guess that fear that says don't misstep is one of the things that sort of leaves us a little bit more.
And it's quite scary, right? Because, when you're sitting in a meeting and you're the only person with a strong view, and you don't know whether you're right or wrong, but it's a gut feeling. And, we've come a long way in a year. And I think you wrote it, is this the tipping point? And I think we did have that moment this week, and CommBank have been leading the way, and they led the way again this week. And so it's quite incredible. Now there are more voices, because I think there have been a lot of people who have been afraid to speak up, because, there can be collateral damage to get something wrong. and make mistakes. And I think that we're at a period in time where these conversations will come out into the open, and there'll be a lot more work being done, and there'll be a lot more collaborations, because we all have realised that we need to work together.
And this is a very quick one for you then. The global trend, I mean, you see this in an international sort of lens. Is there anything in particular post-COVID that you think, we really need to double down on, or one of the focuses you see so much activity, what boards and businesses are struggling with? Anything as a sort of an issue that you put at the top of the agenda?
Look, it's not really, not really issues. It's been a fascinating, 18 months across markets globally, and it's been amazing to see, the amount of capital that's been released. So I think underpinning this, this concept's about investment, and the amount of capital that's in the marketplace at the moment is quite remarkable, and you can see it flowing through locally into M&A space. It's just an unprecedented volume of IPOs coming to the marketplace here in Australia. M&A activity taking out giants in the marketplace, mergers happening, foreign entrants coming in. Just look at Square coming in and the Afterpay acquisition. So there's real structural shifts happening across the board, and at the end of the day, that's underpinned by investment dollars, which I think is we've got people at the table looking at opportunities and what's next. So it's a really exciting time.
And Andrew, I guess the last question for you then, was that you that bought that SHIB for $8,000? It's now a $5.5 billion amount sitting in your wallet, just to be clear, because if it is, we should spend more time together.
I wish it was. I've had that circulated to me a few times, and actually by a couple of my kids as well. So it's an interesting trade. I don't know how you liquidate it without making some pretty substantial moves. But look, there's a lot going on. I think the opportunity is vast. We're seeing that, and I think all the participants on the call today are seeing the same thing. There are risks inherent in that, and I think that is one example of a ramp up of rapid space of time of inverted commas value. And you might have seen recently the coin that was developed around the Squid Game series, which has obviously lured some investors in, and they've been hurt by that. So just got to be very cautious about those sort of things occurring that can really detract from what is really a very positive development in both technology and market and assets and things like that. So there are always pitfalls as in the early days of any new technology or new investment theatre. We just need to be wary of them, but also take that opportunity to develop. I'm certainly looking forward to the next 12 or 18 months, because I'm sure they'll be vastly different than what was going on at the beginning of 2020 in any number of manners.
I think so. Thank you all for being part of part two. I'm closing out now where we go to this.
I'm going to go off script here, Steve, and say one thing, and just to thank you, because behind the scenes you're doing so much work. It's so important that we can have safe spaces like this to have discussions, make mistakes, say things out loud, and have our peers hear them. And really, thank you very much for all the work you put into doing this. Thanks, Lisa. That's very cool. Thanks, everyone. We'll go to the closeout. We'll go to the spooky future with the people that are already there. Thank you to the three of you. Thank you. The last trifecta here, just to close out this conversation, and the aim of this last session as well is to talk about changed views in a lot of respects. And the three people that I have here have been in the space over an extended period of time. I think they're reflective of changed views, and I think credit to all of them. They're either accumulating knowledge or they've made an assessment of what 2018 world looks like, a 2020, and it is a better version today, rather than a lot of the conversations we've had, which have largely been people sort of digging their heels in. So I'll start with you, Simon. If you just the snapshot of who you are and what the organisation is that you sort of represent, because I'm curious as the way the timing has gone here.
I'm Simon Cant. I'm one of the managing partners of Reinventure, which is the Westpac Venture Fund. Obviously, in this space, we've made a few investments. We invested in Coinbase back in 2014, 2015, which obviously listed recently. And more recently in Australia, we invested in a company called Immutable, which has built one of the leading platforms for NFT trading called IMX. And we also invested in a crypto-related fund called Polychain, which is kind of fund-of-fund investments, which has given us a pretty interesting bird's eye view into a whole bunch of the leading initiatives in the space, Compound, a number of the decentralized exchanges, etc. So yeah, that's probably it for now.
Can I just say that's already a lot? I'll tell you why. When I first met you, Simon, you said you wouldn't remember it. I was an inconsequential person in your life. I think it was 2017. I think we're in Shanghai, and you looked at me and said, "Who are you and what are you doing here?" And I had no idea. I have no idea why I was there, save for the fact that I wanted to be there. How did you see it in 2017? I mean, what did you see in 2017 and 2015 and 2014 that other people didn't? Because you've maintained a lens of this ecosystem. What did you see then that made you think this was something that was going to take off?
Look, I guess our perspective has always been from that kind of disruptive innovation viewpoint. You know, when we pitched the fund into Westpac back in 2013, actually, the whole thesis was around what we'd seen happen in media and the sort of gradual, slow then fast disruption that happened in media. And we were big students of Clayton Christensen and a lot of his work. And I guess, you know, some of the really fundamental principles that come out of that disruption thesis are that things that look like they fundamentally don't work today will inevitably get better in a highly disruptive technology. And a lot of people seem to get stuck on the today. You know, I remember having conversations with a number of people about, well, 7 transactions per second, that's not going to do very much, and yada. And, you know, the answer is always, well, these are all going to be solved. These are all solvable problems. If you get enough smart people working on them, then they're all solvable. And I think people need to sort of recognize that, don't get caught on what there is today. You know, like the user experience, even today, it's horrible. If you want to go and use MetaMask and start using DeFi, you know, chances of losing your dough are actually pretty high, because chances of just losing your key or stuffing up on the computer are high. But all of these things are problems that people are focused on trying to solve. There's hundreds, I mean, we're seeing huge numbers of ventures at the moment trying to solve that user experience problem, just that key component of it. So, you know, that's, I think, what people lose sight of. All of these things will fundamentally be solved. And I even see it, interestingly, with, you know, the volatility people talk about with things like Bitcoin, for example. So, you know, the common sort of catch cry is, well, Bitcoin will never be used as a means of exchange because it's too volatile. But again, you need to look at the stages that these things go through. So Bitcoin is in the installation phase. If you look at any new technology, it goes through an installation phase and then a sort of maturity. In the installation phase, you know, when most people think Bitcoin is going to go up, nobody wants to be the person who spent 18,000 Bitcoin on a pizza and, you know, woke up in 2021 and realized that they could have, you know, retired for the next 17 generations on that pizza. So of course it's not going to be a means of exchange when you're spending money that could be worth 10x tomorrow. But at some point, if Bitcoin hits 10 trillion or 100 trillion, at some point people say, well, I could probably spend this now. This pizza is not going to be worth a house in 5 years' time. So maybe I will use it as a means of exchange. So, you know, these things go through stages, and those stages, you know, change. Even they can change the use case that this is sort of applicable to, just by, you know, some of the features and the dynamics of the market that are operating at the time.
And Nigel, you're not meant to change your mind, mate. You're a bank guy. You know, when I met you in 2018, you formed a view. You know, the stereotype here is you formed the view, that's the view, you're right, and no one's going to tell you any different. But I've watched over the last 3 or so years and where you are now, the position's changed materially. Correct me if I'm wrong. You know, when you look at things like decentralized finance and the infrastructure opportunities, do you see a whole new world that you potentially didn't see back in 2017 and 18 in the assessment of where we were with the kinds of constraints that Simon was talking about?
Yeah, I do. And I just want to say hi, Simon, Richard. Nice to see you again. Look, I think I totally agree with Simon in terms of that installation phase. And then there's, to answer your question, Steve, there's this sort of weight of money that you just simply at some point can't ignore, right? And in the DeFi world that we've been watching for a while, or even in just the currency space, it's just the weight of money and the quality of money that's moving into these venues that makes us think, well, what is happening here, right? And so when you lift the hood on that, you say, we've concluded that this is a major protocol shift for financial market infrastructure. And so we're taking the view, and the analogy is I think is very strong, is that we're going through a similar phase, the one we went through 25 years ago, where the internet protocols started transforming businesses, including banking, eventually. And we're seeing the same kind of shift occurring here. We're shifting to more decentralized, arguably more trusted, more secure, faster, cheaper, better, yet to be proven. But if that's the thesis, that these protocols can generate better outcomes and new business models, then they can't be ignored. And we're excited about them because they resemble, in many cases, financial markets and financial market infrastructures. And the transactions that are occurring across those do resemble very closely what we do today as banks. So if we strip out all of the non-regulated concerns, the caution, the volatility, what we see laid bare is just a different financial market infrastructure, which we believe will transition to, or it will transition increasingly towards our regulated perimeter, or straddle that, and then we can get comfortable with the elements that we need to modify, the regulations we need to change, the customer promises we need to make in order to take advantage of that infrastructure and then move into that digital asset economy, which we now completely believe is going to occur.
And Richard, again, sort of closing off the trifecta here, I think when we've been chatting about sort of the bank view and the view of traditional financial services, when people spoke of Mastercards and Visas of this world, they kind of said, well, if these other businesses are in trouble, they're going to be the most in trouble. Mastercard believes in this now, right? I mean, I look at the press releases and the information. We'll talk about some of the things that are happening in the space, but there's a commitment to this in the same vein, isn't there? To correct me if I'm wrong, that this is an inevitability now, and the question becomes, how do you facilitate the payment rails and the processes and the products in that respect? Where does Mastercard sit on that spectrum at the moment?
Well, we've been investing in this space for years, actually. We're one of the leading holders of blockchain patents around the world. And we built our own blockchain platform, I think nearly 5 years ago now. And the question's not been, is the technology interesting? I think the blockchain as a technology is incredibly interesting. The question is, how do you use it? How do you apply it? And as Simon's saying, that there are phases of growth. One thing I'd observe is that people often characterize the discussion around new technology as either new or it's old. It's either good or it's bad. It's either a stable coin or a CDBC. And what we'd say is that polarizing view is probably not right. And what we're seeing is blockchain actually has got some really interesting features that can solve real problems. I mean, live today in Australia, we have our provenance platform supporting farmers getting paid earlier. So what we're doing is actually very simple from a technology perspective. We're using our blockchain platform. Farmers, growers, distributors are adding events to the blockchain as, say, the mangoes are picked and boxed and QAs. And that's allowing lenders to extend finance earlier. So it's a problem that's existed for many, many years. We're just applying a technology to solve it in a faster, simpler, cheaper way than we could in the past. So we're very committed to this space. And I think it's fascinating to see where it evolves. I suspect there will be a middle ground between stable coins and CDBCs, for example. And I suspect that it's certainly not going to be the end of a Mastercard or a Visa or something like that. I think it's a case of we'll adapt and evolve the technology. And there are many good things about the ecosystem we have today. I mean, the role of banks in identifying customers, acting as the holder of deposits in the deposit-taking model. There are many good things that we wouldn't want to throw out. And the example in the paper today with the squid token, is arguably a case of bad actors, and there's always been bad actors, creating a token using programmability to stop people selling it. You had to have twice as many buyers as sellers. You had to have marble tokens to sell squid tokens. They're all features of programmability that are perhaps designed to rip off people. So I think bringing regulators and the good parts of our infrastructure with us on the journey will actually end up with a safer and better outcome for consumers in the long run.
I'll work backwards to you, Nigel, before I come back to you, Simon. I look at marketplaces. Marketplaces are, I think, for me, a fascinating opportunity. I'm astounded at how few people are recognising the marketplace opportunities. You're watching marketplaces emerge very quickly. They're funded enormously. I've never seen inflows to create marketplaces as I'm seeing at the moment. And I also see a much smaller runway for them to get it right. With Lygon, if you just want to sort of let people know what the Lygon sort of project looks like as an example of what a potential sort of, it's marketplace-esque. How is that being missed in the conversations that we're having here? Why are people skipping that step and they're sort of they're off into more they're off into more fanciful and more sophisticated things before they recognise the opportunities in plain sight like marketplaces?
Yeah, look, thank you for that. The Lygon business model is around a genuine platform business or a marketplace for bank guarantees. Now, it's not a terribly sexy area of finance, and it doesn't actually hit many, certainly consumers' radar, unless you're running a small business, in which case it's a massive problem. The Lygon company, it's not a project, it's a company now, and fully staffed and operational. But we came about this from the classical blockchain as the solution, looking for a problem, and we found a perfect problem, right? Where a paper guarantee was being issued by all the banks in Australia, and it was being put in a safe, right? So we had an opportunity to create a multilateral marketplace, digitize the instrument, standardize it, and leverage that technology to have a very strong marketplace bias on our business, bringing together applicants and centrally the issuers and then the beneficiaries. And there's a huge component of that is centered on the blockchain capability, because it allows for there to be no centralized counterparty, for it to be fair, to be equitable, but also to be transparent, and to build a workflow around that our beneficiaries in particular could take advantage of, and in fact remunerate the company for. So it was a perfect model, a perfect problem to solve at the time. But I think what we see now is that platform business model, it can be extended to so many different types of asset classes or documents in particular, and the ability of tokenization to add and replicate that model either through Lygon or through other types of ventures, I think is immense. Tokenization is the key. Digitization that comes from that, the safekeeping of those assets with transparency and trusted parties, is still important. But I do think that that platform business model is going to expand tremendously.
I'll take one extreme there that touched on with Richard. I'll come back to you in a sec, Richard. You fixed the problem. I mean, part of the oversell here early on, I think, with the conversations is people say, we'll fix supply chains. He goes, no one's fixing supply chains. They're a mess. We'll fix bits and pieces of supply chains, and that'll be a really good outcome. At the other end of the spectrum here, Simon, when we're talking about decentralised finance and what you see is coming, these platform plays and language that might not be familiar to some people, layer 1 solutions, layer 2 solutions, those scalable sort of opportunities that present, and a good business is the one that you mentioned that you invested in, Immutable X. They're doing incredible things. Where can this go? I mean, it's such an enormous conversation. I love reading about what DeFi could potentially look like. There's already $100 billion plus locked in decentralized finance projects from a zero base not that long ago. What do you see when it comes to the disruption that is in train for marketplaces and the like?
Yeah, to be honest, I kind of think sky's really the limit in terms of where the disruption goes from here. DeFi is sort of, as Nigel said, sort of rebuilding parallels to the existing financial infrastructure from the sort of wholesale end outwards, whereas fintech was much more, from the user experience inwards. People talk about the crypto mullet, Fintech out the front and DeFi out the back, which is an enjoyable analogy. But, you know, I think that is going to continue. But, you know, I think as we start to develop better identity platforms in DeFi or in crypto generally, and once the majority of assets start to move into that environment, you know, I think even the interface starts to potentially become something that's a lot more of a crypto-based interface. So, you know, I think in financial services, you know, it's going to be a challenging decade, I think, for traditional players to work out where strategically do we need to hold on to, and where do we start bringing in some of these open platforms, because ultimately they are open platforms, and so you have to sort of at some level give some part of your competitive advantage away when you adopt them. So I think that's going to be an interesting thing for financial services players. But, you know, I think it does go well beyond that. You know, I think NFTs are doing a really fascinating thing with intellectual property generally. So obviously we saw, you know, pre the internet, intellectual property was considered precious. Then Napster came along and sort of made everything that was considered commercial valueless overnight. You know, suddenly people could just pick up videos and music and anything they wanted really for free. Now, private platforms came along and found a way to monetize that at such a micro level that that people who were doing sort of illegal pirating felt that they might as well move on to the, you know, commercial platforms, and it was, you know, it was viable. But I think we're now moving into an entirely new space where crypto has enabled digital scarcity for the first time. And that digital scarcity creates an entirely new environment for intellectual property. So the private companies that brought all of the traditional IP vaults onto the internet also privatized all of the user-generated content as well. Now I think we're moving into a phase where even that like all content is now potentially going to be ownable and protectable by the individual. And I think that's going to open up entirely new applications that we really haven't actually seen before. I think it'll transform social media. I do think that most of the big internet players are absolutely staring into the disruption that is approaching them just as much as it is the banks. You know, it's not an accident that Facebook has renamed itself Meta in such a hurry at this particular point in history. You know, it's staring at what's emerging on the Ethereum blockchain and saying, you know, if we don't race to try and own this space, we might lose it. Well, I think there's every chance they'll probably lose it anyway, because again, just the weight of development, the weight of community that's been drawn into this crypto ecosystem, I think will ultimately outstrip any single company's ability to sort of wrap their arms around it. So yeah, I think the disruption is going to be massive. I think, you know, for a lot of these platforms that are, you know, the supply chains and so on and so forth, you know, the interesting thing when we invested in Immutable, you know, we did get a lot of questions because it was ostensibly a game company at the time. And, you know, I think our investment committee rightly asked, why am we investing in a game company? But our thesis was that the first assets that were going to go onto open blockchains were most likely to be digital assets. And, you know, the biggest digital asset market globally really is game assets. So we really felt that was just an entry point for an entirely new platform for assets being represented digitally on these ledgers. And, you know, IMX is already starting to move into all sorts of other asset categories. You know, people are trading all sorts of things, all sorts of marketplaces are being moved onto it. So I think there's a real question for people building some of these supply chain platforms is to say, how compatible is it going to be with an open blockchain? Because I think we're staring into the space where, you know, some of the walled gardens, very similar, and, you know, other people have said this before me, but, you know, where the sort of walled gardens of AOL, and, you know, locally we had Telstra trying to build its own version of walled gardens, eventually sort of gave way to the just overwhelming creativity and energy that was being poured into these open platforms. You know, I think that you know, for these platforms to prosper, they need to be adaptable onto the open platform. If they're not, then they're going to be building themselves into a dead end potentially.
And I think there was an inversion. I'll come to you in a second, Nigel, about this inversion. I think you and I chatted about where effectively you can't compete with a decentralised built-out network because it's too big and it builds out too quickly. In between that, though, Richard, Mastercard recently digested a business called CipherTrace. I mean, is that kind of business, and let people know what CipherTrace is, but is that the kind of business that gives the confidences to regulators quickly, potentially, that says, you know, we're paying attention to elements that might cause you concern. You know, it bridges that gap that says where we are current state and where we're heading sort of future state. Tell me about that CipherTrace purchase and how it fits with what you're doing.
Sure. Well, so we acquired CipherTrace in September. It's a cyber analytics company, and it helps solve some of the problems like we've actually just seen with this squid token. So it helps actually monitor and understand the compliance and viability of different tokens. We're helping to solve some of the problems as to, so Matt and the CommBank team moving into crypto, I think they should be congratulated for the move. But which of the 900 currencies out there are they going to put on the platform for retail consumers to be able to buy and sell? And so we're in that space of trying to help solve a problem that exists today, which no one's really got a good identity management solution. Anyone can create a new cryptocurrency, you know, name it after anything they like, and people can be conned to put their money into it. So we acquired CipherTrace because it's much quicker to do that, to try and build our own solution, given the pace that things are moving. But it's just solving one of those problems along the way. And I think, you know, I take kind of an engineering view of this. If there are real practical problems that need to be solved along the way, and if we can help solve some of those problems, then we remain relevant in the ecosystem as we move forward. And as of course it will evolve. I mean, identity management, consumers having a digital ID, is a problem that's been around for many years, but it's as yet unsolved at scale. So that'll be one of the next problems that needs to be solved along the way.
But Nigel, the inversion that you and I sort of chatted about the other day, my view expressed to you, and it said, won't put words in your mouth, you know, curious to hear your observations of it, is these solutions that are being built out, they're open source, you know, they're decentralized networks. They are a better mousetrap, and they're a better mousetrap available to all, to Simon's point that says, you know, you can build on these things. You don't need to develop business development relationships. You don't need to take anyone out to lunch. Just plug into these things and build on top of them in a stackable way. Is it not an inevitability for the likes of ANZ and financial institutions as a whole that you'll build on someone else's better stack? That tech stack will win given how it's being developed. What will matter will be the brand. What will matter will be the safeness of the organisation, addressing the kinds of issues that Richard has just spoken about. Now, trying to compete with it will, in the medium term to long term, become a futile exercise given how many of these puzzle pieces are being built out for you.
Yeah, look, that's a good summary of our conversation. As you say, look, I mean, as much as banks didn't invent TCP/IP, we're not inventing these new protocols either, but we can certainly see the financial market infrastructure point of view on that, right? We are managers of risk and operational risk, market risk, credit risk, and we believe that's where we have an ongoing right to play. Now, upon which protocols, which technology is often not our decision in terms of how they're built and how they're structured. And as I said earlier, the preferences of our customers will lead us to places that we may be uncomfortable, right? And I think, you know, the move that CBA made yesterday was bold, and it's yet to be seen whether those customers will embrace that. But certainly, all of what we've been talking about today, particularly in this section of the commentary, is that the ship has sailed. And so, what it is that we need to do is to navigate our path towards utilizing these networks, and the power of these networks is unquestionably strong, right? And as interoperability becomes more mainstream, as more networks become EMV compatible, for example, we're going to have an increasingly valuable network, much in the way the internet provided for the globe. And you cannot ignore that, right? The power of networks transcends all companies. You just choose whether you want to be part of the network or whether you want to ignore it. And I think that we have a much more much stronger bias to participate than to ignore. So it's about how we do that and how we do it for our customers. And then we wrap our brand around this capability and try and mold offerings and propositions that allow our customers to keep safely their assets, their digital assets. And to Simon's point, really critical, this creator-owned content, right? I believe, like Simon did just described, this is a huge market, right? Digital content can be attributed ownership, and that is huge, right? Because most content these days, media, music, whatever, is going to be digital. And now that we have the means to certify, verify, and store that, and to trade it, for me, creates a massive new opportunity for business models that, again, banks have, I think, a right, and many other organizations have a right to participate in. So adopting that, putting our brand around it, and forming trusted propositions, which I believe we can do, is their opportunity.
And Simon, I'm going to close out with you on the element that is the weight of money here. You know, I'm observing sort of deals and deal flow, what's happening internationally here, massive amounts of money, Series A numbers that look like exit numbers in a lot of respects. Now, valuations that are being attributed, you know, businesses that are, pardon the pun, being minted as billion-dollar businesses, you know, unicorns from minute one, given their sort of funding rounds. Is it something that's surprising you as well? I mean, this massive shift in weight and investment and how quickly it's coming, that money is looking for a home here, but the recognition that money's not quite the moat that it once was. What are your observations about the way money is flowing and the way people are chasing deals at the moment?
Yeah. Is it a surprise? I mean, it's always, I think whenever you're in a bull market or a bullish market, there's always that slight, you know, anxiety, things always look pretty incredible. One of my observations, I mean, we were actually discussing this morning. There's an interesting thing that happens when you get into a very strong bull market, and the primary metric that becomes rewarded is growth over profitability. And because money creates growth, you get this feedback loop, these virtuous cycles where the biggest players attract the biggest dollars, generate the biggest growth that enables them to attract even more dollars. And so you just get this kind of bifurcation of the venture ecosystem into these just ludicrous rounds that are just massive. And there are still some others, smaller, who struggle. So I think we'll get more versions of that. But I think we will inevitably move into a more, I guess, gradual inclining market over time. You know, I think there's still cycles that are at play. Obviously, we're in all-time low interest rates. You know, I think if that shifts, then we're going to start to see some of the heat come out of, you know, equity and potentially crypto markets. I mean, you can argue it both ways. Some people think that inflation will be extraordinary for crypto because it's an inflation hedge, but at the same time, it's a risk-on asset. So, you know, interest rates go up and people become risk off. You know, it probably works in a multiple ways. But I would say, you know, that it's going to be a time when a huge amount of development happens. A lot of people get onboarded extremely quickly. I think we're still, to be honest, some years away from seeing how is this going to mature and become part of our everyday life. And, you know, I think that's going to be super interesting. The next 5 years, 10 years is just going to be extraordinary, to be honest. I think we're all going to be blown away by the innovation that comes through.
Thanks, Simon. That's a perfect spot for us to sort of end on. I appreciate the three of you giving me this time. And I think it sort of encapsulates the point of this conversation. A lot of the things that we've been talking about as a group in this session and in the previous sessions, they felt very much removed from the conversations that people thought they were having in rooms. And it's just not. I mean, some of the people that look like, you know, crypto crazies and crypto anarchists, some interesting stuff's coming out of that, and some stuff you can discard quickly. But, you know, those conversations are much closer than they appeared to other people. The point, again, of today was saying the mainstream moment has happened. reflected, I think, in the conversations we've had here today. It might not mean it's the mainstream moment in the kind of world you wanted. Some people will continue to say, cryptocurrencies, digital assets are not anything that traditional finance should look at. It's an absurd notion to think others will just sit it out. Everybody is in this mix at the moment, and hopefully after 90 minutes of constant talking, people have just been encouraged to seek out some more domain experience to have a look at this sort of subject matter. And none of us here, we don't sell stacks. We're not here to hold bags. We're not here to do any of these things that are, associated with the industry. The question that we say persistently is this something that you should be looking at? And if you choose not to, I think we're all comfortable saying, great, everyone own their decisions and go about your day-to-day life. So thank you for participating today, gentlemen. I appreciate this last session as well. And from everyone's perspective, thank you for the time and the interest that we've had here. And hopefully there's some value that's been derived from the conversation.